Dear finance professionals and students, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant. Weekly digest for week 1 of February 2026. Union Budget 2026 introduces a significant tax benefit for overseas professionals visiting India. Non-residents will receive a 5-year exemption on income earned outside India. This applies to those visiting under government-notified schemes. The tax-exempt status begins from their first visit for service rendering. This move aims to attract global talent by offering clear tax certainty. India has raised the duty-free import limit for returning residents and tourists of Indian origin to Rs 75,000 effective February 2nd. This update, replacing the decade-old baggage rules, also revises the allowance for foreign tourists to Rs 25,000. Specific duty-free allowances for gold jewellery have also been introduced for returning Indian residents. A high-level committee on banking for Viksit Bharat is expected to examine bank ownership structures, seeking to build fewer but bigger lenders with sufficient balance sheet arsenal to power India's entry into the elite league of developed nations that offer robust and reliable infrastructure, high per capita incomes and quality of life, and a financing ecosystem capable of supporting long gestation projects. The Union Budget 2026 has proposed a staggered timeline for filing income tax returns to ease the rush during the peak filing season and give certain taxpayers more breathing room. Under this proposal, the extended August 31st deadline is meant specifically for non-audit business cases and trusts, while the July 31st cutoff continues for most individual taxpayers with non-audit cases. Bengaluru-based aerospace components manufacturer JJG Aero has raised $30 million in Series B funding from Norwest. Veda Corporate Advisors acted as the sole transaction advisor on the deal. The company said the freshly raised funds will support the construction and capacity addition at its upcoming facility in North Bangalore, driving vertical integration and fund other strategic initiatives. Oracle is considering cutting between 20,000 and 30,000 jobs and may also look at selling parts of its business, including Cerner, the healthcare software firm it acquired a few years ago. The move comes as US banks pull back from funding Oracle's large AI data center expansion, making it harder and costlier for the company to raise money. Possible job cuts alone could free up $8 billion to $10 billion in cash, money Oracle urgently needs right now. India and the US achieved a major diplomatic breakthrough after months of tension and tough talk as they reached a trade deal with US President Donald Trump, slashing tariffs to 18% from 25% following a phone call with Prime Minister Narendra Modi late on Monday. The additional penal levy of 25% that had been imposed on India for buying Russian oil has also been dropped. Trump said Modi had agreed to stop buying Russian oil. The government is exploring a merger of Power Finance Corporation and REC Limited. This move is part of a broader restructuring effort for public sector financial institutions. The Power Ministry will work out the details. A similar merger was considered in 2019 but did not materialize. Shares of both companies saw a rise following earlier announcements. Apple has achieved a record 28% value share in India's smartphone market, fueled by a strong premiumization trend. Consumers are increasingly opting for high-end devices, with Apple's iPhone 16 series leading shipments. This shift is driving overall market value growth even as volume increases moderately. India will champion seamless cross-border payments using central bank digital currencies among BRICS nations. This initiative will be a key agenda item during India's presidency this year. The move aims to enhance efficiency and ease for international transactions. The Reserve Bank of India is keen to promote CBDC adoption for global trade. This follows previous discussions on payment systems interoperability. The budget's move to correct the tax distortion by shifting buybacks into capital gains regime on paper brings dividends and buybacks closer to parity. In practice, however, promoters, especially corporate promoter entities, may still find buybacks more attractive than dividends. Under the earlier regime, buybacks were taxed at the company level as if the entire payout were income in the hands of the shareholder. The law ignored the cost at which the shareholder had originally acquired the shares. Individual promoters will now pay 30% on buyback gains, while corporate promoter entities will pay 22%. Non-promoter shareholders, by contrast, pay 12.5% on long-term gains. Yet, even with these higher promoter level rates, buybacks retain an edge. Dividends are taxed on the full amount received with no deductions. Buybacks, even at 30% or 22%, allow the deduction of the acquisition cost. For many promoter groups, especially those who acquired shares at par through legacy restructurings or via promoter-owned entities, the cost base is negligible. In such cases, the tax outgo on buybacks and dividends may converge, but the structural advantages of buybacks remain intact. The Goods and Services Tax Network has issued an advisory announcing system enhancements in the filing of GSTR 3B applicable from January 2026 tax period onwards. The changes primarily relate to interest computation, auto-population of tax liability, and the flexibility in ITC utilization in line with the CGST rules. These enhancements reinforce GSTN's focus on automation, rule-based interest computation, and improved return accuracy. Indian lenders asked the central bank to relax a number of liquidity rules to allow them unlock more funds for growth. As demand for loans grows faster than deposits, lenders are seeking permission to free up some of the cash they have to park with the Reserve Bank of India for short-term financial stress requirements not to be identified as the discussions are private. The Reserve Bank of India is considering a significant overhaul of its lender supervision, moving beyond traditional ratio analysis to a deeper examination of banks' business models. This shift aims to identify risks earlier, especially as India's banking system expands rapidly and digital threats multiply. IT stocks like Infosys, TCS, Wipro, and Persistent saw declines of up to 8% following Anthropic's launch of AI tools for corporate legal teams. This development intensified fears of increased competition and margin pressure for software companies, contributing to a broader tech sell-off on Wall Street. Swiss bank UBS reported a 56% surge in fourth quarter net profit, exceeding expectations with $1.2 billion. The bank plans at least $3 billion in share buybacks for 2026 and increased its cost-saving target by $500 million. Strong inflows were seen globally despite US outflows in wealth management. The Reserve Bank of India has approved Vinay Muralidhara Tonse as the new Managing Director and CEO of Yes Bank for a 3-year term. Tonse, formerly MD of Retail Business and Operations at SBI, will take over from Prashant Kumar, subject to shareholder approval. This leadership change aims to bolster Yes Bank's growth strategy and operational stability. India's Republic Day sales saw a significant surge in online orders. For the first time, online payments surpassed cash on delivery. Consumers also shopped earlier in the day. Beauty and personal care products led the growth. This indicates a maturing Indian online shopper. Demand for themed merchandise was strong in smaller towns. New Gold Card Visa Program. This program allows wealthy immigrants to seek permanent residency for a $1 million payment. The group argues the scheme is unlawful and violates existing immigration law. They state the program prioritizes wealth over merit. Finance Minister Nirmala Sitharaman unveiled a Rs 10,000 crore SME growth fund in the budget. This initiative aims to boost Indian small and medium enterprises for global competition. The plan focuses on equity, liquidity, and professional guidance. It seeks to transform smaller firms into export champions. This move supports India's trade ambitions and global economic shifts. The Ministry of External Affairs has informed Parliament that no Indian nationals are reported missing or killed during recent protests in Iran. The Indian embassy in Tehran is in regular contact with the estimated 9,000 to 10,000 Indian nationals residing there, offering guidance and support. The government considers them not stranded as Iranian airspace remains open with commercial flights operating. State Bank of India has secured a significant $1 billion loan from Japan's MUFG. This marks the first social loan of its kind for an Indian bank. The funds are earmarked for lending to women and women-led businesses. This initiative aims to boost women's economic empowerment and promote gender equality. In a regulatory filing, CIL said it will hold 100% equity in the proposed intermediate holding company in Chile. The incorporation will be subject to regulatory approvals from the Department of Investment and Public Asset Management and the Ministry of Coal. Kotak Mahindra Bank is significantly expanding its technology team, aiming to hire 500 engineers. This move aims to enhance its long-term competitiveness by transforming into a technology company with a banking license. The bank is investing heavily in AI and automation to improve services and efficiency. This strategic push is set to redefine its operational landscape. US structured venture capital firm Golden Sparrow Ventures on Wednesday raised $20 million in the first close of its Fund 2. According to the firm, it has received commitments for over half of the fund, with 60% of its Fund 1 limited partners reinvesting in this fund. The firm will look to back around 22 companies at pre-seed and seed stages with an average check size of $650,000. Consumer lending platform Fibe has partnered with Flipkart to offer buy now pay later financing on the e-commerce marketplace. Under the arrangement, Fibe's BNPL option is now available at Flipkart's checkout, allowing eligible customers to split purchases of up to Rs 1 lakh into equated monthly installments with repayment tenures ranging from 3 to 12 months. The Flipkart partnership marks Fibe's attempt to carve out a niche in consumer lending for e-commerce, a segment long dominated by banks through credit cards and larger non-bank lenders such as Bajaj Finance. The Reserve Bank of India on Friday announced a wide-ranging set of regulatory and policy measures aimed at improving customer protection, boosting financial inclusion, and easing the cost of doing business for banks, non-banking financial companies, and urban cooperative banks. The Reserve Bank of India's Monetary Policy Committee announced to keep key rates unchanged at 5.25% in its final meeting of the financial year 26 cycle, while stance also retained at neutral. The government has lined up projects worth almost Rs 31,000 crore that will be funded mainly through its green bond proceeds in financial year 27, almost a third higher than the revised estimate for the current fiscal, signaling heightened focus on sustainable financing. The centre will decide the precise amount of the sovereign green bond float in financial year 2027 in March when it finalizes its borrowing plan for the next fiscal, but usually the project pipeline is readied for such funding well before. Chennai is leading a massive southern surge while the traditional heavyweights of Mumbai and Pune face a cooling period. The gap between regions reached a record high in 2025 as buyer behavior turned more selective across the country. Chennai recorded a massive increase in demand, selling 24,892 units in 2025 compared to 16,044 units in 2024. This growth indicates a market that is fundamentally different from the cooling trends seen in North and West India. The city remained stable through the mid-year period before accelerating towards a record-breaking Q3, the report noted. Reliance Industries has bought 2 million barrels of Venezuelan oil from trader Vitol. This is Reliance Industries' first purchase from the Southern American nation in nearly a year. Reliance, which operates the world's biggest refining complex, has bought Venezuelan crude for April delivery at a discount of around $6.5 to $7 per barrel to ICE Brent. India has placed one of its biggest industrial climate bets yet, committing Rs 20,000 crore over the next 5 years to scale up carbon capture, utilization and storage or CCUS, signaling a decisive shift from climate pledges to capital-backed execution in sectors that drive both growth and emissions. The funding, aligned with the CCUS roadmap unveiled in December 2025, targets power, steel, cement, refineries and chemicals, industries that form the backbone of India's economy but also account for a majority of its industrial carbon footprint. India and the United States have established a trade deal framework, significantly lowering tariffs and boosting economic cooperation. The agreement includes India's commitment to purchase $500 billion in US goods over 5 years, with further negotiations planned for a comprehensive bilateral trade agreement. Mahindra Group said it would invest Rs 15,000 crore over the next decade in Nagpur, Maharashtra, to build its first integrated automobile and tractor manufacturing facility in the country. The 1,500-acre facility will be supported by a 150-acre supplier park in Sambhaji Nagar area of Nagpur. Once fully operational, it would have an annual capacity of more than 5 lakh vehicles and 1 lakh tractors. The supplier park will provide components to the new plant as well as to Mahindra's existing facilities at Chakan and Nashik in Maharashtra. The Department of Investment and Public Asset Management or DIPAM announced that financial bids for the strategic disinvestment of IDBI Bank have been received. These bids will now undergo evaluation according to the established procedure, marking a significant step in the government's plan to divest its majority stake in the lender. Non-banking financial companies offering gold loans can now open branches freely, a move expected to benefit major players like Bajaj Finance and Muthoot Finance. The Reserve Bank of India has removed the prior approval requirement for these companies, allowing them to focus more on credit delivery and risk management. However, opening representative offices abroad will still require RBI approval. Power Finance Corporation has acquired a majority stake in REC Limited. This move consolidates public sector non-banking financial companies. The acquisition follows the Union Budget's vision for scaling up credit disbursement and technology adoption. PFC's board has approved the acquisition and a future merger. Post-merger, PFC will remain a government company. The Reserve Bank of India on Friday proposed that banks be allowed to directly lend to real estate investment trusts or REITs, with certain prudential safeguards to deepen the financing pool for the real estate sector. Currently, REITs raise funds through bonds which are subscribed by mutual funds, NBFCs and others. Since these investments are mostly short-term, long-term funding was a challenge for REITs. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.